And now, it's time to see what was in your inbox last night, April Fool's Edition, with Michelle from Payometry Labs.
Good morning, Fintech fans. It's April 1st, and trust me, I thought today's CFPB drama was an elaborate April Fool's joke. Turns out, reality's stranger than satire, especially when federal courts and mass layoffs collide. Stick around because we're diving into the messy breakup between the CFPB and, well, its entire workforce. No fooling around here, I think. Let's get started with today's top headlines. Experian has launched its new CashFlow score, saying that it signals a new era of open banking-powered lending. Experian introduced a new solution, leveraging consumer permission transaction data to enable more informed credit decisions. This initiative aims to provide a score for people without credit scores, to allow banks to loan more easily. Banking Dive is reporting a take on why banks are all in on open source. Major financial institutions like Morgan Stanley and JP Morgan Chase are increasingly adopting open source software development practices to modernize IT infrastructure and attract tech talent. This shift aims to enhance efficiency and foster collaboration within the banking industry. Turning now to the big story for today. Banking Dive is reporting a federal judge has issued a preliminary injunction halting the Consumer Financial Protection Bureau, CFPB, from implementing mass layoffs and mandating the reinstatement of all probationary and term employees terminated since February 10th. The court's decision also lifts Acting Director Russ Vought's stop work order, allowing affected employees to resume their duties. Furthermore, the CFPB is prohibited from deleting or impairing agency data and must restore any contracts that were terminated under Vought's directive. Banking News and Analysis. This ruling represents a significant victory for the National Treasury Employees Union, NTEU, which filed the lawsuit challenging the CFPB's recent actions. NTEU President Kat Farman emphasized that CFPB employees are eager to return to their roles, focusing on protecting consumers from financial misconduct. The court's order underscores concerns that, without intervention, the agency could be dismantled before legal questions about the administration's authority are resolved. Checking in now on crypto and Web3 Finextra is reporting that the FDIC has decided banks don't need prior approval for crypto activities. The Federal Deposit Insurance Corporation, FDIC, announced that U.S. banks no longer need to receive prior approval before engaging in crypto-related activities. This policy change aims to facilitate banks' entry into the crypto sector, provided they adequately manage associated risks. The Defiant is reporting that Ethena Labs' USDTB stablecoin surges 1,500% and enters the top 10 stablecoins. But I bet you don't know who Ethena Labs is because I sure didn't. USDTB, Ethena Labs' synthetic stablecoin backed by Blackrock, experienced a 1,500% surge in market capitalization in March, propelling it to the 8th largest stablecoin by market cap. This significant growth reflects increasing interest and adoption in the stablecoin sector. The Paypers is reporting that UAE is launching the Digital Dirham for retail by late 2025. The UAE Central Bank plans to introduce a central bank digital currency, CBDC, with the Digital Dirham expected to be launched for retail use by the end of 2025. This initiative positions the UAE among the growing number of nations developing digital versions of their national currencies. It's time for the regulatory roundup. Law 360 is reporting that CFPB urged 7th Circ to uphold payday lending rules. The Federal Reserve Board has requested a Kentucky federal judge to uphold its existing cap on debit card swipe fees, defending the regulatory measure's substantive and procedural validity. This move underscores the ongoing legal debates surrounding financial regulations and consumer protection. And that's a wrap on today's Fintech Roundup. Remember, folks, sharing is caring, so don't be the fool who keeps the good stuff all to yourself. Go ahead and drop this episode into your LinkedIn feed, send it to your work BFF, or tag your favorite fintech influencer. Happy April Fool's Day. Keep your eyes peeled for those suspiciously believable pranks, and we'll see you tomorrow.